Hi and welcome to today's video. I am going to be talking about the benefits of buying an electric car through a limited company. Remember, I'm only talking about tax benefits, and as my mom would always say, the first question you should ask yourself is, do you really need to spend money to buy a new car? Effectively, there are two ways of buying an electric vehicle through a limited company. The first way is buying it outright, in which case you can either buy it outright with cash in the business, or you can get what we call a business contract purchase. Effectively, you're buying the vehicle in the name of the company, the logbook will be in the name of the company, but you're borrowing money from the lender to pay it over a period of time. What happens when you buy the car outright? First, the car will be added to the balance sheet as an asset of the business. This is because it's available for a longer period of time than 1 year. Your profits as a result will not change. However, for tax purposes, you will get capital allowances on the acquisition of this car to the value of the amount that you have paid. This will then be taken off your profits for tax purposes to arrive at a lower profit on which you will pay corporation tax. Not only does this strengthen your balance sheet, because you've now got an asset there, but it doesn't affect your profit and loss account. The second way of buying it is through a hire purchase or a lease. In that case, you are renting the vehicle for 3 or 4 years or whatever the term of the lease is, and after that you will return the vehicle with no option to buy. Effectively, when you are doing this, you are renting the car from a company over a period of years. How this is treated in the accounts and for tax purposes is very simple. The monthly amount you pay, you get that as a deduction in the accounts, in the profit and loss statement, and also for tax purposes. Therefore, you will have a deduction of your monthly amounts times 12 on the number of months in that particular year, and that will be taken off your tax. Right, so you've now decided that you want to buy a new electric vehicle, and you've possibly decided about which route you want to go down. But the tax consequences talked about earlier are all in relation to your limited company. What about you as an individual? What are the tax consequences for you? One of the first things you want to consider is what we call a benefit in kind, a P11D. This figure will be talked to you about by the car salesperson saying it's got a low PIK. What does that mean? Electric cars that are available for private use, and remember it's availability rather than actual usage, will mean that it's taxed on you as an individual, just like your salary, I should say. The benefit in kind at the moment that will be applied with is 2% of the value of the car when brand new. So, for example, it's 2% of £50,000. On that amount, you will then pay income tax at your marginal rate of tax. So, if you're a higher rate taxpayer, you would pay 40% on the 2% of £50,000, which equates to 40% of £1,000, which on an annual basis is £400 of tax that you've got to pay every year. If, on the other hand, you're a basic rate taxpayer, your tax would be 20% of 2% of 50,000, and that equates to a £200 tax charge for you being able to use the vehicle for personal use over a year. In addition to the benefit in kind, the company would also have to pay 13.8% national insurance on the 2% of £50,000, which is 13.8% on £1,000, which is £138. So the total cost to you would be 13.8%, £138, plus the tax at your marginal rate, which is £200 or £400, and therefore you're looking at a tax bill of £338. But don't forget, the employer's national insurance of 13.8% is payable by the company. So all in all, it sounds like a good deal. Don't forget, the rules are always changing, and it might be worth talking to us before you make that move of buying an electric vehicle.